Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in this morning and the futures were up, 3 to 4 handles after a pretty drastic down day on Friday. So I think most traders did have short in the brain. Why not? Look for continuation. And I'd say in the first 40 minutes, markets tried to rally and then they couldn't. And then, there was a nice short in the spiders and the SPX when the spiders broke below 143, I believe, 05. Then you had to look at the other pivot low, which off the top of my head was 142.58. And then it pressed lower. And as it pressed lower, some things did not go down. Some financials didn't continue to go down. Caterpillar, which came out with earnings that were pretty much priced in and gave us a nice trade, couldn't go down. Apple couldn't go down. Some tech couldn't go down. So shorts got a little scared and we wound up closing up above those levels. So what does that mean? It means if you were short, you probably should have covered some. It means that maybe we're going to find some support around here and be able to judge what the next move is by the size of the rally. A lot of guys made money on both sides of the market, except for Apple, where you could have only made money long today. And there were a lot of little clues on the action there. We came in today, no one knew what was going to happen. Were we going to hold Friday's low in Apple? What kind of bounce would we have? Would it be quick? Would it be potent? Will there be commitment? So that's why you judge it along the way to figure out what's next. Can we reclaim moving averages? Will it be rejected by moving averages? All things that traders use in order to judge the action. And I tried to tweet a few times, along the way to keep everyone in the Twitter sphere, in the know. But things were so quick, and I really just, talked about it on my radio on the VTF. So you want to go first. Let's go to the chart of the spiders before we get into Apple, and you'll see that the spiders broke below, the 143.05, also broke below the 142.58. But it came off the lows and, closed, I'd say, relatively strong. I wouldn't say this is a blaring, red dog reversal or a blaring reversal, outside day, go nuts, balls to the wall long. I think it's just a reversal, where maybe it's because the presidential debates tonight and he wants to say how things are okay. Who knows? Whatever it is, it was a reversal. Here is the trend line that's been intact since early June. Here is the middle area of this channel. So if you want to just treat this as one big channel for now, we're at the lower end of it. So it's prudent to at least cover if that's the case right there. I wouldn't say you have to go, all in long, but there are still some signs out there that things are hanging around. We'll see what happens if we could reclaim 144.30 or 144.50, to keep this upper level in check. And then you look at Apple. All right, Apple, I told everyone that I would go over the trade. Just looking at the daily chart. Okay, first things first, here's your head and shoulders pattern, right? Okay, the top of the head was about 700, the neck was about, 660-ish. So, some people do it from the top of the head. Some people were saying the neckline is actually a little bit closer to 650, so about 40, 50 points. So 40, 50 points below this neckline, that gets you around 610. Just around. So if you were short and you were using it as a macro short, you at least on the first sign of strength, you cover something into this measured move. Okay, whether you are actively getting long and short during this time period like most of us, that's another thing to be said. But if you were like, okay, I'm getting short when it broke the 21-day, or I'm getting short when it broke this pattern, into the close on Friday, made sense to cover some. Or maybe on the first igniting bar, which we're going to get into now on a 5-minute basis, you had your chance. Okay, but the measured move of this head and shoulders pattern basically got filled. Could we have went to 600 or so? Yeah. Could we have went down to the 200-day? Why not? But we didn't. We held yesterday's low, and today's action changed a bit. It had commitment all day long. So let's go to the 5-minute chart. Okay, so here you are. Okay, guys? Look at this move in the first, just say 5-10 minutes of the day. First thing, you have a downtrend from Friday that the stock was trading in, okay? And then you had the close and the lows. It opened up. And I know for me, I was on my radio and I'm like, I didn't really see that Goldman Sachs note. It got upgraded in Barron's. They were talking about it highly. Einhorn said it was also undervalued. So I was looking for an entry. I was away in Santa Clara over the weekend, so I wasn't really that prepared. So I didn't, go full tier 3. I wanted to be in trader mode. Otherwise, I would have bought it in my swing account. So anyway, look at the size of this igniting bar that had follow through. That was the first time Apple did that in a while. Okay, and then, if you recall, when I tweeted, I'm like, let's see if we see any commitment. Okay, I believe the exact tweet might have said 617-ish would be the area that I would watch, which kind of came in line with this area. This briefly touched 617.61. So if you got out briefly, okay, but then you saw that it really did show commitment. I know guys were trying to short this, saying, okay, Apple has been failing, it hasn't. So trade number one was on this igniting bar when it broke above this downtrend, and just really showed you some commitment, and it took out a lot of areas. I remember 615-ish was an area that it tried to hold on Friday afternoon before failing. So by it taking that out, showed some strength. So if you go to a 3-minute, you'll see a little bit differently. But this was your first trade. I got long around 612, 614, sold a little bit, held a little bit, went to 623-ish, and I got actually flat. I said, you know what, I'm going to get flat. 623.5 was an area that might be resistance. Why? Go back to the daily chart. 623.5 was this low, right? Remember the 623.55? This was prior support. So this could have been resistance, okay? Could have been resistance. It wasn't, okay? Or first time it got there, it was worth selling. So you go back to your 5-minute chart. So that's where I took the trade. And then I wanted to see what happened here. I actually got a little short right around here where it looked like it might fail, and I covered, and then I switched because I knew I was wrong, and I got long right around here. Got long around, 620-ish or 620.5, and then I actually went to take my Spain class, and I said, okay, I think I bought right around here, actually around 621, and I said, I'm going to put a stop in, below, where this little pivot area was. I think I might have done 619, even though the real stop should have probably been below this pivot of 617.61. But again, I just came back, and it didn't really matter because it didn't even get close to there. So here's the thing, real quickly, if you come to me with stops, you don't want to put a stop loss in to protect your day, to count your money. You want to put a stop loss in when the trade changes, when all of a sudden there's not commitment, when all of a sudden it goes from really showing a ton of relative strength to relative weakness and gets faulty. So if you go back to the chart, you will see here, even I bought it right there, I was being a little protective. I said, let me put a stop in, below this little bar, which was like 619, and again, thank goodness it didn't come back down. And then you had another nice move going into the 1-2 o'clock time period. So if you look here now, okay, I was still long it, and basically after the course of time goes by in the course of a day, here was your defined resistance. This was about 626. This was going into 2 o'clock, and unfortunately, because I'm the chief strategic officer, I have to go into meetings. So I added right here, and then I said, you know what, I'll just go back to what I'm comfortable with, and I bought this new high, and then I just I went and said, okay, I'll be back. And look at the nice move that had happened right into the 630. Okay, and then you look into the close, it flagged again, and boom, topped out at a 630, 5. But overall, very methodical tape, very methodical move to the upside, always showing commitment to every breakout. Here was your first move, okay? Consolidated, went sideways. This was another breakout area. What did it do? It came in and somewhat retested it, but held. So you could have said, okay, I'm going to hold this as long as it doesn't go below there, and that held. And then it reversed, bought here, went up, never even came back and retested. Then you had another wide range bar after a little tight pattern, and then it started to just let loose as short started to get squeezed. So it was a nice trade over the course of the day with multiple entries that showed commitment the entire way. Now, if you go back to the daily chart, you will see, what did it do today? Took back the 100-day. Right? Took back the 100-day, which was 627. And I do think, the MA, the 8-day, which came down, it closed right around there. So tomorrow, depending on how it opens, we'll see. Okay, this is what? 642. That'll be an area to take a look at for resistance. Then you have 646. And then you have where it broke down from right around here. So at this point, all we know is that it did show power today. It did show commitment. I like the fact that it closed above Friday's high. Okay, and that means there is power in this direction. Tomorrow you have the iPad mini coming out, so if you come back to me, It'll be, you know, they always try and have an interesting day. If you remember, on iPhone 5, they ran it into iPhone 5, and then the 2 days prior, they brought it in, and then the last half an hour day is when they gunned it. So it'd just be interesting that if they brought it down coming into iPad mini, and then the 2 days prior, meaning today, tomorrow, they squeeze the shorts, and then, you know, keep rallying it into tomorrow's release or announcement or display of the iPad mini, it might be prone for a little profit taking, considering that the earnings still come out Thursday, and it might be just a really good trade between now and tomorrow when they start their event day. And then we'll figure out a new trade when we get closer to earnings to see if there's a more macro scenario that we could take the risk with. I was hoping come earnings it would be, you know, near the lows, so there's less risk and more of a third quarter disappointment priced in. But as of today, no one's going to get exactly what they want, and we're going to all have to make some decisions on what time frame we're trading. This happened to be a big Apple recap meeting, but you know, I focused on it today because I was away and I came back, and that's something that wound up providing a nice cash flow opportunity. If you want to take a quick look, scan through stocks, Goldman Sachs, we talked about this 123. It broke it briefly and still looks okay. It's above the moving averages. XLF, you know, did a little bit of a break below Friday's low, came back above. It's still in the middle of this upper range, still acting very well. XHB, still hanging around, still above this upper top third of this range, showing a lot of strength. So financials and home builders are still hanging around, hanging tough. They should be the first things that go if we do continue, and if this lower end of the range did hold. Google, I think, needs a little bit more time. You see 3 bottom tails in a row right here, so it's trying to put some support in. The low here was 669. It traded below the prior day low of 672, closed above it. So some guys made a little bit of money shorting below it and then buying when it came back above. And we'll see what happens here. I do think ultimately the 100 and 200 are going to move up, and that would be a better spot. So I think it's still just a two-way trade. Amazon, I do think broke the 100-day because people were scared of high beta. Spoke about this potentially happening in the morning call, and it did. And I think just wait till earnings, we'll revisit. Cat was a nice trade this morning, guys. Talked about how Cat came out. Their guidance wasn't so bad. Going to be interesting to see if it opens up down $1 and goes down to support or holds support and closes higher. All in all, was a nice active trade. I think guys on the virtual trade floor saw me buy it down 40, 50 cents and then went up $1.50. Took trades along the way. Now you at least have support to trade against. You look at the 3-minute chart this morning. It was a nice trade, nice gap fill. Right away, it came down and just refreshed here. This was buy area number 1 when it took out the first 5-10 minute high here, which was about 83. I think I waited till around here because I was messing around with Apple. So bought here and then I think sold it into this. It was a nice trade, nice cash flow, and then it topped out, came in. Probably came in further than people would have thought if it was going to be strong, but held the middle end of it and then went sideways back and forth. Very choppy thereafter. And then closed okay for a stock that came out with not great earnings, not great guidance. So for now, it looks like maybe it's glass half full for Caterpillar. We'll see. All I know is it was a decent trade, and now we'll see if there's any kind of follow through. So with that said, today, I would say is not a blatant, blaring day to take notice, but something, happened on a constructive nature for the bulls. We traded below Friday's low. We traded below last week's pivot. Couldn't get any more downside pressure. Maybe it needs a few more days. Maybe it doesn't, and came back above it. So that always has you switch some gears to covering some shorts and looking to see what happens next. This would probably be considered day 1 for IBD again, where we made a new low and closed strong. And that'll be their day 1. So now between now and 7 sessions, usually between 4 and 7, they look to see if we can get a gain of 1% or more on high volume, and that would be considered a follow through. And within that, we want to see some stocks show relative strength, maybe like Apple did today. You want to see some things start to repair some of the damage we've seen over the course of the past few weeks, and you want to see the financials stay strong, the home builders stay strong. That'll give us some 2 good groups to turn to. So all in all, the jury's still out. I'm still staying tactical. I didn't go back to 8 to 15 positions today and say, okay, I'm back to a portfolio approach, market on. I'm still going to try and take trades and figure out if we could stay with things longer, and we'll get that clarity with more time. So with all that said, I hope you guys had a good day trading, and I'll see you tomorrow morning with Brittany Umar. Have fun watching the presidential debate tonight. I will try and tweet some of my opinions. I will, no, I probably won't keep my politics out of it because tonight's a political night. Just maybe I'll keep it a little muted. With that said, have a good night.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.